Hi, everyone. Welcome to another episode of Tax Talk Unfiltered. I'm your host, Spencer Carroll, and I've got a couple of repeat esteemed guests with me, Julie and Adam. We'll have them give a short intro here shortly, but today's episode is on proactive tax planning. What exactly does that mean, and why should you care about it right now? We're recording this in June. It's going to get released in June. So the middle of the year. Why should you care about it in the middle of the year? You might have just finished your 2025 taxes. Maybe you're still working on it. You're on extension. You're waiting for some K1s to come through. But that doesn't mean that you should neglect your 2026 taxes. So real strategy takes time. We want to get ahead of that with you as a client of ours. The moves that lower your tax bill happen months before you file, not necessarily in March and April during tax season. So I'm going to quickly pass it over to my guests here, Julie and Adam, to give a quick introduction. Adam, we can start with you.
My name's Adam Bolitho. I am now a team leader here at Gelt. I'm an enrolled agent and I have about 15 years experience, really solely advisory. So that's why I felt that, Gelt would be such a good fit for me and just the advisory focus.
It's awesome. And this is Adam's second episode on the podcast, so we're excited to have him back. And Julie, you're a pro by now, so people definitely know you, but would you give a quick refresher intro?
Yes, for sure. My name is Julie Susskind, also senior tax manager and tax team leader here at Gelt, coming up actually in just a couple of days, 2 years at Gelt. So it's been very exciting working here and seeing the evolution of what we've been able to offer here for our clients the last couple of years. So it's been a lot of fun. Working also in public accounting for close to 15 years myself in a lot of different industries, some foreign tax compliance experience, high net worth individuals. And then most recently here at Gelt, working with, that industry of those high net worth individuals and closely held companies.
Yeah, that's great. Well, thank you both for joining and sharing your experience and wisdom with us here. Julie, I'll stick with you for this first topic of conversation, which I kind of teased it at the front. What exactly does proactive tax planning mean? And it's something that we are proud of here at Gelt. We feel that it is a differentiator between us and other firms. When you think of reactive versus proactive tax work, what does that mean to you?
Yeah, no, it's a great question. I think that it's really something that you really, people, I guess a lot of taxpayers don't necessarily realize how much time can be needed or how much planning can be needed in order to implement a real tax strategy. And I think you really hit the nail on the head, Spencer, when you said that the actualization of the optimization opportunities, you'll see those when you file the actual tax return, but you can't just show up on tax filing day and expect that your accountant can just wave a magic wand and present you with all these opportunities. There are some easy, low-hanging fruit, some of the more common ones that many taxpayers may be familiar with, but ones that require any kind of restructuring, any kind of significant outlay of cash, that takes time. And something that I always remind my clients that a lot of strategies do require an initial outlay of cash for one reason or another, whether it's a certain investment you're looking into, whether it's restructuring your company and there's an admin sort of component. So very often there's no free lunch, right? And you really only reap the benefits of these opportunities months or even potentially over a year down the road. And that really requires a lot of foresight and planning from an experienced accountant that can understand and see the future and can really understand the impact of the decisions that you do and do not make. So proactive tax planning it's really the only way. There's really no other way to do tax planning other than from a proactive standpoint.
Yeah, absolutely. No free lunches. I love that you said that. I like to say no easy button. And I tell clients all the time, most tax strategies, like to your point, Julie, require some sort of money investment, time investment, risk tolerance. And those are three things that you usually can't do on a whim, on short notice. It takes some planning and some understanding from you working with your CPA of what's going to be required. And correct me if I'm wrong here, Julie, but most strategies, there's still some, but most strategies you can't retroactively apply once the calendar year end has transpired 12/31.
Yeah, so you're definitely correct. There are some that can be, but I think you mentioned a good point there that there's a risk tolerance, right? And I think that that's also really important to recognize because as you go further down the calendar year, there are strategies that can be implemented, but the further you are from the point of when they should have been put into action, the further you are from that, there could be an additional level of risk or exposure by implementing them late. So a lot of opportunities can be done retroactively, but again, you're inviting potentially additional risk, potentially the IRS not allowing a certain strategy to be implemented retroactively. There's nuance to a lot of different strategies, and the longer it takes to implement them, sometimes could have their risks involved. So it really just depends on what the strategy is.
Yep, totally. And then Adam, do you have a calendar that you keep in your head when you think about tax planning? I'm sure it's consistently all the time, but is there a perfect season of the year in your mind when it actually makes sense to sit down with your CPA and start working on this?
Yeah, I would say the whole year, right? But
Yeah.
no, given the point in the year that we're at currently, the time is absolutely right. I mean, for these year-end items, right? So if you're setting up a formal business entity, as I think Julie was alluding to, you need to do it real accounting, right? So this would no longer be a disregarded entity and potentially generate a balance sheet, things of that nature. You would have to set up payroll. All these things I'm mentioning are things that you really need to have by year end, right? Our lives are busy, right? And as we alluded to, I think it was a great way to put it, and how I put it to clients a lot of time, tax planning is work, right? There's no free lunch. It takes work, both on our part and on the client's part. So absolutely, for year end items, there is no better time than now, for sure.
Yeah.
Totally.
And I'm curious to get both your thoughts on this one. And I've got an idea in my own head. Is there a strategy that you find clients are most often missing out on because they're delaying their tax planning and they're not coming to their CPA until November, December, and so they end up missing out on the benefit?
So one of the more common strategies that we really work with our clients on is retirement planning, right? 401k contributions, whether it's through their own employer, whether it's a solo 401k, so they can implement or they can contribute both the employee and the employer. And one of the, trickiest items is when a client comes to us at year end, they can technically still contribute to their 401k. But now we're talking about if they really want to be aggressive and they really want to optimize, we're looking at a large chunk of cash that needs to be put up at one time. Versus if the client had come to us earlier in the year, then they could plan for that and they could plan for having their cash available in, portions throughout each quarter or each month or each paycheck, versus coming to us at year end being told, hey, you can benefit from this, but you have to have $100,000 of just loose cash available, which for most people is not so practical. Or even charity also, right? If a client would like to be able to benefit from taking their charitable deductions and they didn't plan accordingly, then perhaps they're just on the cusp of being able to itemize their deductions, and they kind of have to, those few extra dollars of charity will get them over the edge. Had they planned for that throughout the year, they wouldn't have been stuck, again, outlaying a chunk of cash. So I think one of the biggest points that I can't emphasize enough is that most strategies requires you to pay something, right? The IRS is very infrequently giving you something for free. Even a child tax credit, which feels like a free credit, involves having a child, which is very expensive, right? That's obviously a little bit of a certainly more complex topic, right? But retirement planning,
just for tax planning, by the way.
What's that?
Don't have a child just for tax.
Exactly. But no, it's definitely, I would say that a client can come to us at year end and we can give them what their options are, but it could just feel very daunting to have to spend that much money when you're already paying for tax planning services to begin with. And so we can still take part in it. They can still benefit from the strategy. It's just going to feel a lot more burdensome than had they done it earlier on in the year.
Yep. And building off of that, Julie, something that I see a lot is even if they do have the cash available for that retirement contribution to their solo 401k, maybe nobody's really told them about the benefits of a solo 401k. So they're still using a SEP IRA, and they don't realize that a solo 401k, you can do the employer, which is what you're getting with the SEP IRA, but you could also do employee and even after tax, mega backdoor Roth, all that good stuff. But after year end, you can't do the employee anymore. So that's $24,500 of a tax deduction that you're going to miss out on, even if you had the cash available, to your point. And then if you're older, we're talking over $30,000 of a tax deduction that they're going to miss out on because you can't retroactively make that employee contribution after 12/31.
Exactly.
So really good point. Adam, what about you? Are there any big ticket items that you see people miss out on all the time because they're a little too late?
Really just being behind the eight ball and not hitting that year-end deadline. So individual taxpayers are cash basis taxpayers. So any deduction that you're looking to reap the benefits of, you need to pay that in by year end. So in the charitable example, you need to make the charitable contribution by year end or you're essentially out of luck. There's a few small things you can do after the fact, right? So maybe an IRA contribution or something like that by your tax deadline. But yeah, largely most of the big ticket items, especially if you're forming the separate business entity, so an S Corp or something of that nature, truly need to be done by year end. So essentially 91% of your things fall in that bucket.
Yeah. The S Corp is a big one that I see often. And it's not necessarily that we would tell a client, you need to make an S Corp election on January 1, but you should at least have an LLC in place so that we can make the election and have the income count towards your S Corp. I talked to a lot of people in Q4 that come to me in October, November, and they say, oh yeah, I'm having a great year. I'm going to make like $400,000 through my sole proprietorship. And it's like, oh, well, we could get you to form an LLC and elect S Corp, but 10, 11 of the 12 months of the year, you can't change the way that income was received.
I think, everybody should have an LLC for, basically the legal protections. And then, okay, you have a banner a year, and then, okay, you can automatically make that S Corp election, whereas you hit the nail on the head. If you didn't have an LLC, now we essentially have to wait another year and make your income down for the following year. So,
yeah, I actually really want to emphasize that point, Spencer and Adam, because I think what people misunderstand about the S Corp is that the S Corporation itself is not its own separate entity. The S Corp is an election on a pre-existing entity. So if you don't have that pre-existing entity in place, you cannot elect an S Corp on an entity that didn't exist, right? So if you just had that LLC, and it could sit dormant, right? If you're not even sure what your plans are with it, the fact that you at least have it, and at the end of the year, you realize that you had a really great year, we can then retroactive the S election. But without an LLC, the S Corp cannot come into effect. And people don't understand that nuance of the S election, that it's not its own entity. It's an election attached to a pre-existing entity. And that's a really, really important point, that if you're not even sure what your future is of your business, form that LLC. It could be super simple to keep it. Costs are very minimal. And then should the time come that you're ready to elect, you can do it very easily.
Yep. No, great point, Julie. And once you have that S Corp, not to get too into the weeds here, but then there are even additional strategies that you should consider, like making PTE payments when you make your quarterly estimated payments throughout the year. And you don't necessarily miss out on that, I guess, per se, but in order to get the full credit, if you're doing it late in the year, assuming you've already made your other quarterly estimates, you're going to way overpay into the state and then get your refund once you file your actual return. Most people, because of your point earlier, Julie, just don't have tens of thousands of dollars of cash to overpay their taxes just to achieve this one strategy. So in reality, they usually miss out on the PTE strategy if they make that election too late. So It's a chain reaction. A lot of stuff
Mhm.
happens if you delay things too far. And I'm having conversations every day right now where people are kind of like, oh, yeah, I'll decide in a couple weeks or a couple months or before September. And I just can't stress enough that if you know you want proactive tax planning and you've found a good CPA, there's no time like the present because every day you wait could be tax savings that you're missing out on.
You'll forward them to this video after.
Yes, yes,
You'll
exactly.
you'll have them watch this video and then decide.
Yeah, that's right. Well, I feel like we've touched on the entity structuring, so I was going to ask a couple questions about that, but we've hit on the S corp, why it's important, the timing of that. So we've covered that there. I kind of want to switch gears to a little bit of a lighter, more fun topic for the two of you. Thinking about probably two words that aren't used in the same sentence very often, joy and taxes. The joy of working in taxes. I'm just curious. We kind of want to get to know the tax team members from Gelt a little bit better and focus more on you guys through our social media platforms and whatnot. I'll start with you, Julie. You know, most people hate taxes. They don't want to think about it. They don't want to talk about it. They certainly wouldn't want to work in it. Why did you choose to go into this profession and what do you find joyful about the work?
Yeah, sure. I know. And you should know that those are sometimes my favorite types of clients because then I feel like I can really be there for them and really guide them and prove to be a real support system for them. So if you hate your taxes, you can come to me. I'll take care of you. No, I actually fell into accounting. I'm not sure if I ever had a dream necessarily to become accountant. My father is actually an accountant. So growing up, I think I definitely did not want to become an accountant. But, in college, I took some tax courses and I really enjoyed it. And I was living abroad after college, and there was a real market for tax accountants. So I kind of think I fell into it. And I think, especially since I've come to Gelt, where we have such a focus on strategy and really getting to the core of taxes for our clients. And we're not just turning out tax returns like other firms, more traditional public accounting firms may do. I love being able to help a client navigate their taxes. And even more than that, if we're able to find a big win for them, where they're able to really optimize something, and whether it's planning for the future, whether it's investing in real estate and really being able to get to the core of whatever that strategy is and ultimately save money, for me is such a success story. And I feel so great about it, especially for those clients that hated taxes to begin with. And here we're showing them and it doesn't have to be so bad. I specifically have a client, she actually doesn't hate taxes so much, but she came to us about 6 months ago, and she has a bunch of short-term rentals, and I noticed right away after meeting with her that she had not been claiming the losses on her short-term rental. As an active real estate professional operating a short-term rental, there are more aggressive loss claiming opportunities that you can have versus just running a general long-term rental. And we were able to amend her prior year tax returns and get her upwards, I think, of $50,000 of refunds. So it was really exciting to be able to do that for her. And she came to us early on enough in the year that we were able to focus on those prior year returns, right? Because amending, I think it was 3 years of federal and state returns, that's not an easy thing to do. It took time, and we wanted to get it done before starting to work on her 25 return. And we did, and we were able to get them. And she's, I think, almost has all of the refunds back from both federal and state. And it was so obvious that when she came to us, it was the right time. And she came to us early on enough in the year that we could really focus on it. And we were really able to provide her with the real attention that it needed. So stories like that really warm my heart and just make me love what I do.
Yeah, that's an awesome story. And you definitely brought joy to that client, and bringing joy to our clients brings us
Yes,
joy as well. Or it makes the job fun.
exactly. She was very excited to let me know when she got some of the refunds, and it was great.
Yeah, that's awesome. And you're following in your dad's footsteps. It's a family business now.
Exactly.
Cool.
He's very proud.
Yeah, that's great. Adam, what about you? Do you just like torturing yourself, or is there a reason you chose accounting, and do you find joy in the work and maybe a client success story as well?
My undergraduate degree is actually in finance, and I went out into the working world and was around all these financial advisors arguing about maybe a 50 basis point difference in the rate of return on their investment accounts, right? So 0.5%, right? And that's a big deal. Like we're making clients a lot of money. But I realized with this tax thing, right? I mean, people are paying taxes at a 30 or 40% clip every single year. That seems like a big deal. So I really got into the technical side of it. And I do think it's a huge thing to long-term wealth, right? With compounding growth and so forth. So I decided at some point in my 20s to go back and get my master's in taxation and become a specialist in that space. And yeah, I've been a tax advisor and preparer since then. So yeah, I take a holistic approach. So there's the current year benefits where you're unleashing additional deductions. That's great. Realize some cash, fantastic. But I really enjoy bringing it all together, right? So with the retirement plans, the long-term planning, the way I refer to it a lot of times with clients is there's a lifetime tax bill, right? I mean, we're looking at your current year over year, and that's just super important. That all accrues, and that's a part of the lifetime tax bill. But what happens on the back end with all these retirement assets? If you're extremely high net worth, what happens with your estate planning even? Take even a step further. What happens when you're passing this on to your children? And it's all part of a big picture. And yeah, I had a client, I think, who really appreciated that. He said exactly as much via email and actually gave us a referral. So that's kind of how I approach things. And I don't know if that's a specific example, but I mean, when you're talking about the large lifetime tax liability, that can get into the hundreds of thousands, maybe even millions of dollars, right? To your long-term financial situation. So that's kind of how I approach things.
I love that. That's a great insight. I appreciate that.
Yeah, that's awesome. Thank you both. It is fun. I kind of fell into it like you, Julie, and didn't expect to be in this position. And I started my accounting career in audits. So I knew enough about taxes to pass that section of the CPA exam, and then moved on and never thought I would work in taxes ever. And then Gelt was kind of my first deep dive into that world. And I love it too. I think my wife gets tired of my passionate conversations with her about different tax strategies that could save our clients or even us as a family money on our taxes. She could care less. And even though she could care less, like you mentioned this, Julie, and I see it a lot in my calls with clients, taxes can be so complicated and intimidating to people that it can be really scary and they don't understand it, and it's super expensive. It's their biggest bill every single year. And I've had clients cry on calls with me. I'm sure the two of you have experienced that as well, because it creates such a heaviness for them and a stress for them. And having somebody, calmly and confidently tell them it's going to be okay, we're going to take these steps and we're going to help you and we're probably going to save you some money along the way too. Huge sigh of relief from those clients. So it's a lot more than just crunching numbers and pocket protectors. We have a good job and it's fun. But
proud to be part of this team for sure.
Yeah, it's great. Well, thank you both. Julie, I'll leave the last question with you. If somebody's listening to this and it's striking a chord and they think, you know what, I could use some proactive tax planning right about now, what's the first step that they should be thinking about? Probably reaching out, right?
Exactly. I was just going to say that you should find your local trusted tax advisor that you feel has the right training and has the right guidance to be able to provide you with that proactive planning. There are many different types of accountants out there, many different types of ways to approach tax. And it's really important to find an accountant that puts value in the strategy aspect, which is really the more complex side to tax. Preparing a tax return could be quite simple. You're just putting information into return. It's really the nuance behind the numbers and how you're getting to those numbers. And it's important to find your accountant that you could really trust is going to get you to the right spot.
Yeah, for sure. And don't wait. I know it's summer and everyone's busy. The kids are out of school. You're going on vacation, but good tax planning could make that next summer vacation completely free because you're saving all that money on your taxes. So don't wait.
Hopefully,
Yes.
yeah.
So anyways, thank you everybody for listening. Leave a comment, let us know what you want to hear about next. If you're interested in Gelt, please don't hesitate to reach out. You can go to our website, joingelt.com. You can email me, Spencer at joingelt.com, and we can get that conversation started, and we'd be happy to help you.